In this video, I want to show you my strategies I used before I built the bot. Now I have a bot and implement those strategy in the bot to make profit. But before I did that, I did it on the traditional way. And I want to show you which strategies I use and how I make my first couple of €1,000. If you want to see how I did it, stick around and I will show you. Right now, you're looking at the Nasdaq or the US Tech 100, and that 100 is the part where it's all about. It's the top 100 companies of the S&P 500, which the most people are interested in because the top 100 has the highest trading volume. You're looking at a screen from capital.com. That's my broker that I work with, but you're free to use any other broker you want to. I just use this screen to explain to you what I did and how I did it. And besides that, I also have, of course, a Python screen open. In this screen, I won't do any programming, not today. Just want to use it to make the notes, so you don't have the notes to make, so you don't have to make the notes yourself. And at the end of the video, you simply watch the notes and you can write it down on your own. So in between, I make the notes in this Python screen, but for the rest, we're going to work with the Nasdaq, and that is this screen. Ready? First tip. The first tip I want to give you is about trading itself. Trading is a risk. So don't think and don't ask me to give you any advice of how to handle your money, but trading is, per definition, a risk. You can make money, you can make lots of money, but you can also lose money, and you can lose a lot of money. So if you're doing some trading, either scalping like I do, day trading, or handling in shares, you can do it your own, but be careful. It's not always going to work, and you got to accept the losses you have. We try not to have too many losses, but there will be losses. Not always, not every day, but there will be. So keep in mind that trading has risks. Positive or negative, there are always risks. Tip number 2. So first we're going to look at the Nasdaq and all these red and blue blocks you see all around it. These are called candles, and it's called a candle because it has a body and a longer or shorter wick on the upper side, but also on the downside. So that's why we call it a candle. And these candles are the most important thing you're going to look at if you want to trade in the Nasdaq or any other trade. The candles tell you a lot. Let me grab one of the candles, one of the bigger ones, with a nice wick on both sides. Can we find one? Grab one of the candles. There are enough out there. This one looks nice. Take the red one. You see in the upper top, and I don't think it's really visible. I'm going to try to blow this up. Yep, there it is. We were looking at this candle, a blue one now. You see in the upper top, while I have my mouse over this candle, that there is an O with 20,177.8, an H with 20,301.8, an L with 20,145.8, and a close with 20,250.6. And then you also see a plus 69.1 and a plus 0.34%. What are these numbers? These numbers are the O for opening price, the H is for the highest price, the L for the lowest price, and the C is the closing price. So this candle opened at 20,177.8 and closed at 20,250. This is where we're looking at, and this is where we're going to work with. For your trading strategy, you need to know this. Maybe you already did. Okay, then you can skip, but this is what you need to know. Trading on the Nasdaq also means that you want to know how the Nasdaq goes. Are we expecting that it goes up? Do we expect large drops like this one? Or do we expect to go up? Do we have a point? Oh, right here. We have a large drop down and then we went up again. So those information is also very important to pick this up at a website or at a YouTube channel to be informed about how the Nasdaq is performing. What is to be expected? If you don't get your information, then your strategy, whatever strategy will be, will not work because you did not anticipate on what could be happen in the next couple of hours. I use for my information YouTube channel from Caddy, is from Moneyvest. I will leave a link in the description so you can look at him. He gives, by my opinion, excellent advice about what's happening around the Nasdaq. He gives information about the trading, about shares, about what's happening on the US market, the trading indexes, a lot. He gives a lot of information in a high speed, short volume. So it's really helpful if you have that information too. So that's the second one. Get informed. 3, before you get to a trading, you want to know if a position you want to open, if that is a correct moment to open a position. That's what you're looking for. You're looking for strategy, and opening position at the right time is what gives you a profit. If you don't do it at the right time, or you don't watch what you're doing, it will never be a profitable something. And be able to know when to open, that is the strategy we're talking about. I used for my strategy, for my opening of positions, a very simple strategy. And there is nothing more relevant for trading as the KISS. Keep it simple. Yeah, keep it simple. If you keep it simple, then you will be profitable. If you go too far, too elaborate, it won't work for you. Now I have a question for you. If you want to trade, do you want to trade as a day trader, or do you want to trade like me as a scalper? Day trading and scalping are two different kinds of strategies. And for day trading, you need a lot more information than just the strategy I'm going to show you for scalping. Scalping is working with the differences between the ups and the downs in the Nasdaq. So if I open a position right here, I'm going to wait because I expected it that it will go down. I close the position. That's it. And when I close and I know it's going up, okay, I open a new position and wait until it goes up and goes up and goes up, and I close again. And I have 2 trades. I have 2 positions. And in this case, if I would have known this, I would have twice made a profit. That's scalping. That's something different than doing day trading. If you're looking for day trading, sadly, you need to do something else. That's not my part of the game. I'm just doing the scalping. Good. You're still here? Good. Then let me give you some tips around what to do with a scalping and how you can use this strategy to make your own money. That's probably you're aiming for. Okay. First one, keep it simple. We are looking at candles. You see there are candles around. There are red ones going down and blue ones going up. We look at 3 of those candles. 3. Those 3, no matter what we get, and we're looking forward to it. If I look to the current position, I have 3 candles. The last 3 is a blue one, a red one, and a blue one, a red one, a blue one, a red one, and then again a couple of red ones. But I'm only interested in the last 3. The last 3 candles is what we're looking at. I make a note for it in my screen. We have 3 candles. I call them the current candle or C candle. I call the next one the previous candle or the P candle. And then the third, I call the oldest candle. It's not the oldest candle, but it's the one before the previous. And we only need 3. So I call this one the oldest candle. So the O candle. These are the 3 candles we're talking about. This is your basis. These candles are the one we're going to use to base our entire strategy on. So let's go back to the screen of the Nasdaq. If I look at the Nasdaq, at this screen, you see 3 candles and they are all 3 in a different color. That's not good. We're looking for candles in the same color. So this one and that one and that one, those 3 were in the same color, and I've got 3 blue ones, 1, 2, 3 also. We're looking in our strategy for 3 candles in the same direction. And that's what we're going to do. We're going to do if, I'm going to make an if statement. I know it's programming, but just plain English. If the C candle, if the computer works with me, if the C candle is larger than the P candle, and the P candle is larger than the O candle, I need a O, please, then we do a buy. Simple. 3 candles in a row, and if the current candle is larger than the previous, and the previous candle is larger than the oldest, then we go for a buy. If the C candle is smaller than the previous candle, and the previous candle is smaller than the oldest candle, then we go for a sell. Easy. It's the first step. Let's call it the basic. And your basic strategy is looking for 3 candles in the same color, growing or declining. Look at the screen. So we're looking for 3 candles like this one, 1, 2, 3 going up, or 1, 2, 3 going down. Why are we doing this? Because, and that's what you're looking at, because if there are 3 candles in a row going down, or 3 candles in a row going up, in this case going up, then usually there is a 4th and a 5th. And usually it will go on for some time with going up. So 1, 2, 3 candles are bigger. This one, the oldest, the previous, and the current is bigger than 1, 2, 3, 4, 5, 6, 7, 8, 9. In total, we went all the way up. And if you're good enough and you will think, okay, this is it, you will close your position right here and you have made a profit. Because you saw that 1, 2, 3 candles were bigger, and so we go up. Going down the same way. Then we have this one. It's not that good. 1, 2, 3 candles going down. The fourth candle is also down, but then again, we had an up, another smaller up, down, and then we went down all the way. But 1, 2, 3 candles going down, and we put out a sell, and the sell will give you the next row. That's our basic strategy. It's not perfect. We're going to do some more, but that is the idea you need to think about. 3 candles in a row, and then buy or sell, and then wait until you are satisfied with your position, and then close. But we're gonna enhance this. We're gonna add an extra criteria, and why I'm gonna show you. And let's take me a look at 3 candles up or down. I don't care. Let's see. These 3 candles up. Yeah, these are 3 candles up. I've got another one here. 3 candles up. This one opens at 20,476. Sorry, 67. This one opens at 20,480, and this one's opened up at 20,489. So these are small numbers. They went up, and you could open, but it's not that strong for a good opening position. So you could say, if you want to have a good strategy to open in the candles, you need to open candles who are a bigger opening, like this one. If we look here, we see that these 3 opened at 19,973, this one at 20,025, and this one at 20,066. Am I right? This one, yeah, at 20,066. So the difference between this one, 90,973, and the 20,066 is almost 90 points. And that's a good signal to go. And you see, we went up for several candles all the way up till there. So these 3 were good. So what you could do in your strategy for your own criteria, you could say, I want to have a candle. The current candle should be larger than the previous candle, but it should be larger than the previous candle plus 25. So the current candle should be larger than the previous candle plus 25. And you could say that the previous candle should be larger than the oldest candle, also with plus 25. When you do so, 3 candles in a row, all 3 candles go up, each with a difference of at least 25, you're going to do a buy. And of course, going down, same way. So previous candle should be smaller as the previous candle, minus 25. And the previous candle should be smaller than the oldest candle, minus 25. And that should lead into a sell. So now you have an extra criteria when to open a position. For yourself, make it easy. This is the better one. Good strategy based on simple things. Simple things you can see, simple things you can watch while you're looking at the market. You can see and notice this one is at 20,318. This one is at 20,301. This is not a 25 difference, so we're not going to do. This one, 20,301, and the next one is 20,280. That's a difference for more than 25. And we're going to look at this one. It's 20,240 versus 280. That's 40 points difference. Okay. Now we have 3 candles in a row going down with at least 25 points difference. Let's open a position. And if you would have done it, then you see we had 2 large candles going down and you would have made a profit. But we're not going to leave it there. While you see, even if we go down here, you are not sure if the next one goes down also. And in this case, we would have opened a sell position, and then once it goes up, and then we have a problem, because instead of a profit, well, it wouldn't be a loss, but if we close at time, we won't make a loss, but we wouldn't make a profit too. So we're going to add some extra criteria to this. It's not only 3 candles down and 3 candles up, or 3 candles down up with the extra 25, but we're going to use some extra help with it. And to do so, we're going to need an indicator. And in whatever broker you are at, every broker has indicators. And an indicator helps you make your decisions about your positions, if you want to take a position and what you want to do. And the indicator I want to look with you at, if you can search for it, is the MACD. The MACD is your moving average conversion diversion. Nice word. Look it up. But it gives you a sign about how the market is moving. You see, these are bars. We have red and green bars with lighter green and lighter red bars who can help us by making a better decision if we should make a buy or a sell. That's what it is. And these bars are getting larger and smaller. Another one we see is 2 lines. You see a line in, what would be orange and blue. Those 2 lines are also significant for your decisions. I want to explain both of them to you and how to use it in your strategy in to buy or to sell. But we're going to add the MACD. And the MACD, it has bars going up and down, and the stronger the bar is, like we saw right here, it went down, down, down. You see on the MACD, on the same place, that the bar gets larger, 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 larger. And when it's largest, you see, okay, this is a good point to be. You see, it's a good moment. We have 1, 2, 3. These 3, 1, 2, 3 candles. You see 3 candles in a row. You see 3 bars getting bigger and bigger. That's good. Wait for it. As long as they are getting better, the better your position will be and the profitable you will have. At the point when you have opened your position in a sell, so you have shorted, and you are down here, and then you see that the next bar, this one, is a blue one, and this one is also still a red, then you know, okay, this is a blue one, don't panic. The next one is again a blue one, but now the bar is more white and getting shorter. The third candle going up, you see, okay, again, there's a third candle. The bar is white still and still getting shorter. Now is a good time to step out. Close your position and you're out. These will help you in your decision making, when to stop, when to get in, and when to get out. Good point. On the other hand, let's see if we can go more today, like this one. You see that the bars are almost nothing. A little bit up and a little bit down, some red, some green. This one too. There's almost nothing gone in. If you look at the candles, you also see there is nothing. There are candles 3 in a row going up, and only the 3 one here. And then when you see this, you know it's no good. We have to wait. This won't help. This is not a right point to open a position. Be patient. It's a virtue. Be patient. Wait until it's getting better. When does it getting better? And that's what those orange and blue line tell us. Because if you look at this, these bars aren't good, but you also see that the red and blue line kissing each other. They are close to each other. This means there is nothing going on. This is not a good point. We got buys and sell. No way good. Then, right at this moment, the blue line is on the downside. The red line, the orange line is up, and they are widening up. That could be, not directly, but this could mean we getting a better position. Sadly, when we're looking further, you see that the two of them kissing each other again. Then the roles will turn. The blue one is up, and the orange one is on the downside. These telling something. Do this. Watch this. If I go back and we're going to look at a better position somewhere here. Yeah. This looks, this one is better. It's even better to show you. This position, you see that the orange is on the other side. It's down. And the blue one is up. While the orange is down, you also see that the line goes up. So there are not enough blue candles, but in general, you see that the candles go up because the orange line is on top. Is down. If the orange line is on top, we're going down, then also the market's going down. So these telling you also to watch when to do a sell or a buy. And I want to take this a bit smaller. Thank you. You see, these crossings are always the ones we're looking at. If there is a cross between the blue and the orange, and the blue and the orange walk away from each other, then something is going to happen. And you see that the bars are getting greener and greener and larger until this point. And you keep on going, and you see this one, 2, 3 blue candles, and the other candles also going up. Great. This would have been a good moment to do your trading. Could be. It looks fine. Candles going up. The bars going up. The line is on the blue line is on top. So we're getting a momentum in buying. We see the blue candles going up, and we did our buy. Again, it is simple, but those 3 things are going to help you. I'm going to show you one more tip for the extra. If you have indicators, there's another indicator we can use, and that's called the Bollinger. The Bollinger Bands. And the Bollinger Bands are also helpful in determining if you should get in or get out of a position. And I'm going to look for a good point in the band. We have one right here. We have a blue one up. The orange one is below. So we know we had an up line. We see also up candles. And the green bars are also getting bigger and bigger and staying green. But in the Bollinger Bands, you see that the candles, and especially the wicks, are near the edge of the Bollinger Bands. Near the edge. That means that at a certain point, there will be a sell going down. And that's what you see. At a certain point, there will be a cross, and right here is the cross, and then you see it will go down. So the Bollinger Bands in the up, and here we have one down. In the down, the Bollinger Bands line, this sell goes beneath the Bollinger Bands. Okay, it looks good. You see the orange candle is on top, and the bars getting redder and redder and bigger and bigger. So it could be, but they are outside the Bollinger Bands. So be careful. It could be that the next one is not a red candle anymore. And you see, we got one. These are better. 3-1 within the Bollinger Bands, below the middle line. 1, 2, 3. Are they big enough? The difference, 25, we said. Are they big enough? Yes. Okay. We could dare it? No, we could not. Because the red bars are no longer red. They are light, they are pinkish, and the bar is getting shorter and shorter. So these 3 candles, although they look fine, it's not recommended to open a position at this point. This is a strategy. This is simple. Keep it simple. Look at the candles. See what's going on. Look at the MACD going up, going down, and look at the bars of the MACD. The bars with the candles help you a lot in making your decisions about going in and when to get out. That's how I did it. That's how I get my money. If you like it, please like and subscribe. You can follow me also on my journey to my bot. I also have a bot doing the trading for me, getting some passive income from the bot without doing anything, because the bot works 24 hours, 23 hours a day. If you think it's something for me, come to me in the Discord channel. I have a Discord channel. I will leave it in the description, and then we can discuss it if you're going to join the bot and if you can make profit without doing anything than just watching getting rich. For now, I hope you enjoyed it, and see you soon.